Welcome to Trading Lounge and the Asian Report. We'll be looking at the ASX, the Nifty and some Australian stocks. And with the ASX200 here, it is possible that we can make one more new little high to come in through through here before we see a correction here. So we'll go in and have a look at this scenario here. So we're looking at 5 waves up, 1 and 2 and 3 and 4, and then up for the 5th wave here. So we've got 1 and 2 here, and 3 here, and 4 here, and then going up for 5 here. I can count 3 waves up here. We can squeeze 5 waves in this little area here, but it's always sort of bothered me a little bit. Let's just go in and talk about this here. If we do move up through here, it's probably the banks that will take us higher while the resources start correcting, and we'll look at that too with a few of those stocks. So on the intraday 4-hour chart here, so we can look at it like this here with 1 and 2 and 3 and 4 here. And when we get to this point here, we can count wave 1 here and wave 2 here, and then 1 and 2 and 3 and 4 and 5 to here. So it's kind of nice to put wave 3 here. We can put wave 3 here and wave 4 here, and I'll show you this, and wave 5 here to have that finish, and that's kind of what we've done in a way, but it may not be the case, but we're going to have a strategy to handle both. The fact, if I put wave 4 here, the problem with that is that it overlaps the top of wave 1 here. Not a big deal at this particular degree of structure, but you know, it's certainly worth sort of noting at that point here. So yeah, we could get, if we go to the hourly chart now and just have a look at this here. So from this wave 4 here, I counted 5 waves up for 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 for the 3rd wave, and a 4th wave here and a 5th wave here, and it fits okay, you know, but it does make the scenario that that, you know, wave 1 is really quite large and wave 5 is really small. I mean, it's possible. So yeah, we just need strategy for this. Now also too, what makes it tricky on the physical market, the ASX200, it does appear that we've got 5 waves down here, but in this one here, it certainly looks like we've got an A and a B and a C of 3 waves down here. So what we decided to do before was that we would go go long above here, then down to here, and then we could go long above the 72 here. So you may be long already, and that's fine. We'll just need to let's just create a stop for that. So that stop can go under there, because if we look at this low here, we've got 1 and 2 here, little 3, 4, 5. So that would be a safe place for that. I think we could just get it a little bit closer as well. So just in there. So let's do that for that. So if you are triggered long here, we'll just put that in here and the stop there. You can move the stop up to 72 once the 80 becomes the support here. I would certainly take some money at the 6.2 here, even though if this is a wave 5 coming up here, then a wave 5 to this point here, finishing here for this, then we would look inside of group 1 here. So 10, 20 and 30 make up group 1, so that's where we would, between the 20 and the 30, would be looking for a top there in that space there. So if we look at this in terms of a tick chart in here, let me just bring in a little bit more data here. So from wave 4 here down here, we look at this as wave 1 and 2 here, and that's fine. And we'd look at this here as 1 and 2 and 3 and 4, and then looking all of this as 5 waves here. Yeah, and then this is the ABC for the 4th wave here. Then this moves up here nicely as wave 1 and 2 here. I have to say this is really quite messy here, and it's quite possible that wave 2 could sit here, but I haven't done that because this move down through here appears to be in 3 waves as well. Corrective here, when if I have wave 1 here, this would be an A wave to here, a B wave over to here, and a C wave down to here. So it's possible, but even then we would need to look at this as wave 1 and 2 here, and a third wave moving up through here. Yeah, and if that's the case, then we'll travel higher from that point, and we shouldn't breach this low, any of these lows here. The 6165, the lower end of group 2 should stay in place here. If this is 5 waves down here, which on the cash market it can be counted like that, then we would have to look at this here as corrective rally here, and we would have to label it an A wave here, and a triangle for a B wave here, and then a C wave ending in here with 5 waves in here. If we've got 5 waves in here, I'd have to pull that apart on a 20 tick chart to see that, but it would be something like that here, with an A wave here, triangle for a B wave, and then the C wave finishing up here. Yeah, so in that case, if we're going to short, if I can just come back to the hourly chart here, we just need strategy within all of this here. So so we were looking to go short below here originally, because this was the 61.8% retracement level here from this high. So and then we used the levels here. So 6100, 10, 20 and 30. So the 20 is always, the number 2 rather, is always a nice scenario. If that becomes the retested resistance, then I normally find that if it becomes the resistance, then it's a part of this number here. It sticks to this number. And if it's going to stick to this number, then we would see it move further down. So like this market moved down, it moved down through the number 2 here, but didn't retest it as a resistance and fail at that point. Nor did it do it here as well. So that kept us safe. So we've had that down here. We've brought that up to here. Now we can bring this up to here now as well. So on the short side here, that would be the short trade under that point there. If you wanted to move a little bit closer with that, then that would be okay too. You could use the 72 here as resistance. And in that case, you would also have a smaller trade on as well. So I'll put a thinner line for half a position at that point. But it must be, coming down and touching the 72 here, 6172 is not enough. It really needs to lock under there. Okay, and you can also look to add under the 65 here as well if that becomes the resistance, which will really cater for this one here, this low here. But yeah, in a bullish market, Friday is a bullish day with Monday to follow through. So in that case, this can certainly move higher into this space here. Okay, yeah, and it does appear that the banks will push higher. The resources, this is FMG here. Okay, Fortescue Metals. So we know that we can see a nice strong third wave in here. So most of the stocks started on the January Christmas run here, moving to the upside in line with other global markets. Most of them anyway. But obviously this one has started earlier than that. So this is a third wave moving up. So this will be a fourth wave moving back, and then a fifth wave moving up here higher. Fourth waves can get a bit complicated, especially after a big emotional event like this. And this will also play out across the medium level here as well. So that's something that you can we can work with a little bit later. But I'm showing you this because this has started the first decent fall from here. Basically a week ago. So when we look at BHP here, It hasn't fallen as much, but we were expecting that to fall, so it's in corrective mode here as well, and that's the same for Rio as well. Here, even though that Rio is lagging a little bit, it will also fall into that correctional space there as well. So we can expect that to come down from here. And when we look at the banks, they can push up from here. So if I look at CBA here, just this daily chart, of course, this little pattern here is corrective, so we should see that push higher, and that would be the same with the other banks as well. So A and Z here. Push a little bit higher. I don't particularly. I'm aware that this is a corrective move and we can push higher here, but I don't want to trade it because it's typical to make a new high here and then roll over from that point. If there is weakness on the Friday here, then the short trade would be under this bar here. Okay, and then that would drop from that point, but I'm thinking this is 1 and 2 here and a third wave up here, fourth wave and a fifth wave to move higher here. So yeah, the banks will be higher and the resources can be lower for today. Alrighty, the Nifty. So with the Nifty here, the move, this is the 1 hour chart. We know that this is a 61.8% retracement level here. If the 11,000 became the support here, then we would be trading long from that point. This move down here appears to be in 5 waves, so we should see another 5 waves here. This move up through here has come up to the box here, the 10,900. For the 61.8% mark. It hasn't found support on the 900. If it does find support on the 900, you can get half a position. That's why I've just got the thin line here. You get half a position here and then look to add on 11,000 if that becomes the support. On the downside here, then this low here now would be the trigger for any short trade here. And of course, if this market does move, if it does move down through here, sure, we could look to add again, but what will happen in around this old low here is there will be some sort of correctional bounce here, so we should just monitor that for the time being and see if we can get a position in here, because we'll have to hold through this one here and leave our stops out of the way, so the stop will be wherever that last high is here for the time being, if that's going to be the case, and then we can look to add further down here. So we've got some setups here, but we don't have it hasn't been triggered just yet. We just need to see how this folds out. I mean, that was our plan, because once this came down here, we knew we had 5 waves. We could have traded this up to this point here, but we're more interested, because we had 5 waves here, that we would wait for this to fall into place, and then look to trade it to the downside. And yeah, like I said, we're looking for tops in the S&P 500 and so on. They're not displaying fantastic moves to the downside. We'll have a quick look at the S&P while we're here for this. So we were considering the S&P having a top in play here, and we've got a short position in here with a stop here. We would go long here if the 2800 became the support, so we need to have that sort of backup there. We'll also be looking to go short again down here. In fact, we can pretty much just borrow this one here. We can go short below that 2780 area here as well to move in, and all these of course can come across to these spaces here. Yes, but what I'm saying here is we don't have a lovely 5-wave structure down here. This was 5 waves, so we knew that after correction we'll get another 5 here, but this can be an A and a B and a C wave here, then up for 1 and back for 2, up for 1 and back, and build up from that point there. So we haven't left here. The other point with this too is the trading levels, And we know that the 2800 is a minor level, and number 8 always see it as a profit taking level, so we always see people taking profit at number 8, and we're seeing that, and that's good. But this is a minor level, and then the next degree down is sub-levels, so 10, 20 and 30 is sub-levels, and then we go down to 80, 72 and 65 here. So they're the sub-levels below this number here, and what we tend to find is that the market will vibrate across this number, but it will always stay within this range here. It can pop down a bit, but it can't find that as the if it finds this as the resistance here, then it's going to move down further from that point. So if it finds group 2 as resistance, then we know it's leaving this number to the downside. If the number 3 here finds support, then we know that it's leaving this number here and it's going to be moving to the upside here. Support here, the same as resistance, takes a while, so we normally have the arrival, the reaction, the first high above the level, and then this sort of pattern here. If it goes back up and tests these highs here, that's where we would go long from that point. So you have to allow that to play out here. You have to be patient and allow that pattern to play out, because it couldn't just retest here and drop from that point. But you don't short it there either at this stage. You would only look to short it when the number 2 becomes the resistance. And then if that becomes the resistance, this can also spike down to 1.5 to 0.5 here, 15 here, and then move back up from there. But it's at that point you'll find the retest playing out there. So it may just go straight back up there. So the 5 is really important, and the retest here is really important. But if that retest fails and this moves down, then you know that you belong to this number. And if you were looking for a top like we are, then we know that that's the start of it at that point. That helps confirm it in my mind anyway. So and that's just through observation. So using the trading levels and the Elliott wave and money management is a sort of a freestyle way to move forward and trade. So that's that. Thanks for tuning in. Cheers.